You're all set, Ayana.
Awesome. Welcome back, everybody. This is our free lunch module. So I know it may be us. We've only got about 50 minutes per module, and we'll get to your lunch break immediately thereafter. We're going to discuss internal controls this module, and that's going to be something we've referenced throughout the other two modules. Eric alluded to it, and module one did as well. Let's go ahead and advance slides. In module three, we are going to define risk assessment relevant to fraud and its importance in our management of our grants. We're going to learn practical steps and methods to identify potential fraud risks within the organization and understand the risk factors that are critical so that we can increase our organization's ability to detect and prevent our susceptibility to fraud as we identify and explain the essential internal control activities relevant to our management of our grants. We're also going to learn best practices for the design, implementation, and maintenance of effective internal controls and procedures. We're also going to recognize how those internal controls and procedures that we employ directly mitigate and prevent the risks associated with fraud identified in our previous module. Next slide. As we begin to discuss risk assessment, we're going to lay our infrastructure. So here's your foundation to prevent fraud. We cannot prevent what we don't know exists. Risk assessment is a proactive process where we identify, analyze, and evaluate potential fraud threats. Risk assessment serves as our organization's first line of defense against fraud. It's crucial for grants because we have very high value and complex grants in place through the federal government. There are, of course, specific regulations and regulatory bodies that add many layers of compliance and risk therefrom. We also help to allocate our resources more effectively to mitigate the greatest threats when we, of course, assess risk and mitigate it. And it's required, of course, to establish and, of course, monitor our internal controls by many of the grantors that provide the funding to implement our grants and programs as a best practice. And so here's an analogy. It's like checking the weather forecast before we take a trip. It's a preparation process for potential storms. Next slide. So what is fraud risk assessment? There is a five-fold systematic approach whereby fraud risk assessment is a structured process in which we evaluate our organization's susceptibility to various fraud schemes. We answer some key questions here, and these are also five-fold. Where are we vulnerable? What types of fraud could occur? Who might perpetrate fraud? What is the potential impact of fraud if it occurs, and how likely is it to happen? Our goal here is, of course, to understand the vulnerabilities in our organization and to prioritize our efforts toward mitigating them, and, of course, continuing to monitor and scan not only the internal organizational environment, but the external environment in which it is embedded in perpetuity so that we know when new threats such as these emerge, we're ready and capable of defending ourselves against them. And so that five-fold process entails the identification, analysis, evaluation, treatment, and monitoring of threats in an ongoing fashion. Next slide, please. So there are several steps involved in fraud risk assessment. Our assessment journey involves these steps from identifying the potential scenarios to ongoing monitoring. So first, of course, we identify those fraud scenarios by brainstorming what could go wrong. And so you've heard that concept maybe of murder boarding and brainstorming where you actually do best worst case scenario analyses and you think out loud about what could your competition or someone who wanted to threaten your agency or your particular organization do to throw you off from where you are. We analyze again the likelihood and impact of that. What is the probability, of course, and how bad would it be? And it doesn't always entail a numerical probability as much as it does those procedures of environmental scanning like SWOT, pastels, spell it, all of those Porter's five, all of those things that involve the scanning of the external environment, and of course the scenario that would occur if in fact we were threatened in that way. Evaluating, of course, our existing internal control. So what measures do we already have in place that we can leverage without, of course, expending any additional resources of human capital, time, and of course money? And as we develop our mitigation strategies, how can we reduce risk? And of course, monitoring and reviewing that. Is it working now? Will it work in the future? And are any new risks emerging for which this particular process and the implementations we're employing would not work? And if so, what are they? And how do we prevent them as well? And so it is, of course, an iterative process that develops through collaboration with all of the members who are a part of that stakeholder group, who are responsible for the organization's ongoing progress, scalability, learning, growth, and so forth. So it is not something that occurs in a silo. It should be an ongoing, continuous improvement process. Next slide. Our brainstorming of potential fraud scenarios means, I think I said this in module 1, we almost have to think like a fraudster. We put our little criminal hat on and play Clue or something, It's like, it's the first critical step in risk assessment is brainstorming. So what could actually go wrong? Worst case scenario, we have to think from that fraudster's perspective. The method here is that we gather many different constituent groups. And of course, we're talking about cross sections of the functions and roles in the organization from all of the many departments that operate together to effectuate the task of the grant. But we're also talking about the many layers and levels of the organizational strata, whether it be the frontline customer service type of associates who face our customers and clients day to day, or even those middle level managerial performers, senior level leaders, and even the executives who sit in the boardroom who may not be present on site every day, but who have decision-making authority about the growth and scale of the business in perpetuity. So if someone wanted to defraud this grant, how would they do it? Where are the weak points in the processes we have in place? What data could be manipulated in a way that would put us at risk or threat for fraud? And which of our assets, if we look at all of the assets on the balance sheet that assesses them, are the most vulnerable among them? So as we again look back at that grants management lifecycle, consider the risks at the application period, the award period, the expenditure and financial reporting period, and then the closeout of the grant, because there can be many at each cycle in that life cycle. For example, how could someone get paid for work not performed on project X, like that cleaning example where we had some type of discrepancy in the identification of the type of task they perform, an inflated invoice amount, and we needed to at least flag that in red ink that said, I'm going to look at this later, maybe in the aggregate combined with all of the other reasons for doing some additional investigation. Or I'm just going to pick up the phone right quick and ask a few key questions that might lead me down a different path. Okay. Next slide, please. As we analyze the data that puts us at risk, maybe there are some clues in our numbers. Leveraging existing financial, operational data might reveal those hidden anomalies we talked about as outliers in the patterns of our numbers that suggest fraud risk. So here's some things to look out for. Large, unexplained variances from the budget, several of them in sequence or non-sequential order, unusual spikes in our spending in certain categories, numerous small round dollar payments, that end in 00 and so forth, high volumes of transactions with a single vendor likely sometimes for the exact same item because there is such a rush to grab that dough, missing transaction sequences in a numerical order where there's a number or two missing, and then repeated payments of the same exact amount to different entities. And that repeated payments comes up even in a bank where you're trying to send a Zelle and you didn't get confirmation that the first Zelle went through for that exact same amount to the person you're trying to pay. And you go back to that same application, put in that same amount to that same recipient, and many banks will flag it and say, I'm not going to send that same amount to that same recipient because it's the same amount I just sent, right? But what happens if that repeated payment of identical amounts goes to different entities? That also becomes a problem. So the tools we use here are, of course, our spreadsheets, Google Sheet, Excel spreadsheets, and basic analytical software, such as that which is used by the financial reporting personnel that we have hired as a part of our team to report on our financial management. Next slide. As we review the incidents that have previously occurred, we're not just looking at them and saying, well, I know what happened. We're also learning why it happened, where it happened, when it happened, what exactly happened, and what we can do in the future to prevent it from happening again. And so as we examine those fraud attempts, there are various ways we can do it. So near misses, hits, and so forth, even errors that are human errors that are just mistakes will provide us some insight into the organization's vulnerabilities. And so that process of just looking back historically at what has occurred is very important. It helps us to analyze our internal audit reports, review past investigations of fraud, even if the fraud turned out to be unsubstantiated then. It doesn't mean we're free and clear for the rest of our journey. We must also examine those whistleblower complaints as to what circumstances surrounded that and what caused it to occur and so forth. And then look at our prior grantor audit findings. What did they find? Was there any language used that might key us or tip us as to how to prevent such activities in the future? So the focus here is not just what happened, but contextually, how did it occur and why was it not detected earlier? Okay, next slide. As we interview key personnel, we might get some better insights from people who face our customers and clients on a day-to-day basis. So we must engage with our employees on a direct basis, involved in our daily operations to uncover valuable insights into process weaknesses. We might interview our finance and accounting staff, our program managers, our procurement staff, our grant administrators, our internal auditors, and we must approach them in a non-threatening, open-ended question format so that it's informal. It's something where you have already established a degree of rapport, comfort, trust with the people that you're employing to effectuate the tasks of the programs and projects that your grant was intended or mission to achieve. And they trust you. They know you're not going to come at them sideways, and they already appreciate you for the impact you're trying to have on the beneficiaries of this grant. And so the conversational tone with which you approach the interview is very important. And just focusing in that conversation on contextually, here's why we're having this conversation, and let's talk more about our processes and controls and how effective they really are. We're not making any accusations. We're just uncovering whether or not the people who face our clients and customers on a regular basis happen to have a full understanding of the processes and internal controls we have in place. And so the visual there is important because they're just two people talking. It's a collaborative setting, it's relaxed, it's comfortable. There are chairs or couches with cushions, and there's an ear listening, right? So we're sure to not just interrogate and barraging with people with questions. We're also engaging, in conversation and discussion. And so that's also very important. Next slide. As we conduct workshops on fraud risk, we've got to understand collaborative brainstorming is also very important. So we facilitate workshops in an effort to bring together our diverse team members to collaboratively identify and discuss our potential fraud risks. The benefits of that is that it draws on the many layers of perspectives in the organization across all functional areas, from each, that's horizontal, and then vertically, we're looking at all the many levels in the organization's leadership and structure. And then it increases each and every organizational member's ownership of the outcome, the process and the outcome of the risk assessment procedures we're employing. It also fosters an organization's culture of awareness. So everybody has insight and visibility into what risk assessment is, what our processes and procedures are to mitigate that risk, and the internal control measures we have in place for them to be actively engaged in that process, like a game of Clue. They're going to go do their documentation. They know when to pull up the handbook on this. They know when to flag this by emailing, so on. So all of that is in place. And we'll talk more about that as we get to Module 5 and then wrap up today's sessions. As we can use interactive exercises, just like we're doing in today's training sessions, that scenario-based learning is very important because it puts you directly in an immersive experience that you might encounter in real life. And so simulating the real world is important so that the translation here is made readily. We can transfer what we're learning on this little PowerPoint into the real life. And what happens when you're actually confronted with these issues? The key output, of course, is a comprehensive list of potential fraud scenarios that are specific to your organization and the grants that you manage and the funds you receive. Next slide. As we map our business processes and find the gaps in those processes, we're visualizing our key grant processes through flow charts, whether we're using squares or rectangles or diamonds, and all of the capacities of a flow chart. Those key processes help to identify the gaps in our internal controls and the points of failure that are misses in that process versus hits. And this becomes a total quality management lesson for me because I have one of those Lean Six Sigma yellow belts that I'm trying to convert to a black belt soon on Coursera. But you know what I'm trying to say. This becomes fun and engaging from a mathematical standpoint because we can chart it out. We can do our XY matrices. We can do our root cause analyses, all the things, And so what we're looking for here is our control gaps, a point where no control exists. You know how in Lean Six Sigma, if you're familiar with what I'm talking about, there are upper and lower control limits. And of course, you don't want anything that you produce, whether it's a product or a service, to fall outside of those boundaries. Everything's supposed to stay above the lower and beneath the upper control limit. So at what point does the process look what they call in Lean out of control? And what single points of failure exist as a miss, where one person has way too much authority, and that's just one example, or we simply failed to spot that there were several little outliers in the data as we examined the numerical data on our assets portfolio that we could have identified in advance of this type of fraud occurring. Are there complex or manual steps involved? Of course, all complex and manual steps may involve human error or be so complex that they're more prone to error and manipulation because they're not simplified enough to be understandable or reproducible by each and every spreadsheet we employ or person who manages them. And then are there documentations or lack thereof? And when there's no documentation in place, the procedure itself becomes unclear. Okay, next slide. Considering our external factors beyond the internal walls of our organization, and we've alluded to the fact that there are both internal and external procedures that have to be employed to really mitigate and get a holistic sense of where our greatest threats for fraud and risk therefrom occur. But we must also consider these external factors as influential in our organization's vulnerability, such as Economic downturns, we kind of know the tune of that can increase pressure on individuals, creating financial hardships in the communities of beneficiaries we serve, or even on organizations where we have revenue shortfalls. The industry trends, the new technologies through artificial intelligence and everything else related to it, emerging fraud schemes in a sector, for example, may begin to take place because that sector is fledgling and flapping, trying to stay afloat. Regulatory changes, new compliance requirements that may have been developed since we did our continuing education, and we haven't had a chance to go back and look at the code on it. So that creates new vulnerabilities because our lack of awareness is in place. And that lack of awareness does not mean that we're not accountable. Just because we don't know something doesn't mean we can't be held accountable for it. And then vendor and partner risks, financial instability of key partners and our ethical reputation related thereto is very important. So when we don't do full quality assurance on the vendors with whom we partner to procure the products and services that we're delivering to our end users, and that quality assurance lack creates some sort of risk or vulnerability in our process, because that vendor may also be unable to fulfill their own duties and obligations under the contract, then we've got a serious issue that might need to be addressed. Natural disasters and crises, particularly in certain areas, can create chaos and reduce oversight, and thereby increase the opportunity for fraud. Next slide. Our grants life cycle approach to risk, stage by stage, is going to require that we have more tailor-made attention at each phase, from application for the grant to close out of the grant at the end of that journey. So fraud risks evolve throughout the application phase. We talked about misrepresentation of capabilities, false certifications, and so forth. During the award phase, where undisclosed conflicts of interest emerge, bribery, and there's a list of other elements there. Expenditure phase, where we see false billing, ghost employees, fund diversion, unallowable costs that were documented as unallowable in the grant contract that we failed to acknowledge or review fully. And now that same exact cost that was identified in the grant agreement as unallowable is emerging in this list of costs on your financial management report. The reporting phase, falsified performance data, manipulated financial reports, and then of course on the closeout phase, failure to return unused funds, even if they weren't spent, and you're afraid that you won't get another grant, you still have an obligation to report them as unused. And then, of course, improper asset disposition. So disposing of assets improperly. And then the benefit there is that it allows for targeted controls at each vulnerable stage. When this happens, what will happen next? And that almost becomes that flow chart called the decision tree matrix that we're familiar with. If this does occur, then what will we do as an organization? And that's where we see the flow charts being very effective at helping not just our grants manager leaders who have, been managing the grant, but each and every member of the organization at all layers. Okay. Next slide. Specific risk areas for grants and where to dig deeper are very important, as they consistently help us to identify as whether we have higher fraud risk in these areas that might require more scrutiny. Those risk areas that are higher include procurement. As we go out and look for the products and supplies and services that we'll use from vendors and suppliers to be selected through bidding and so forth, we must ensure that that process in particular has a risk mitigation, quality assurance type of control in place. Personnel costs, whether it be timesheets, our payroll, our fringe benefits, and so forth, are all very well controlled. Travel expenses and reimbursements and per diems related thereto. The subawards and subrecipient component of the grants management process must be monitored, reported, and payments processed using those same level of internal controls as you would use for other high risk areas. And then equipment and inventory, the tracking thereof, the disposition thereof, even the storage thereof has to be, of course, documented and tracked so that we're not paying exorbitant storage costs and so forth over time for things that might be scrutinized as not just being exorbitant, but erroneous on some of our expenditures. In-kind contributions, are they valued at a certain price? What market price and rate, and at what point was that market price determined? And how do we document using receipts and so forth therefrom? The cash receipts, the revenue recognition. If the grant involves generation of revenue, have we recognized it using the proper procedures such as a nonprofit confirmation letter or receipt, a cash receipt for payment of, XY donation dollars toward, those types of things to generate revenues to continue to flow into the programs and projects we're employing for the beneficiaries who our organization is designed to serve. Next slide. As we look at documenting risks, there's a risk register that we can leverage systematically for recording those risks we've identified, the characteristics they have, and the responses we plan to employ when we notice those risks have emerged. The key information to have in your risk register, whether it be a spreadsheet or a dedicated risk management software, include a description of the risk, like the ghost employees on payroll, the fraud scheme that you suspect or that you determine to have been in place, such as asset misappropriation, the likelihood that that is a fraud, high, medium, or low, the impact it has had or could have in a worst case scenario, such as a financial impact, reputational impact, operational impact, and so forth. Existing controls in place, not only what controls exist, but whether they have been employed and to what extent. If that control process involves 3 measures or bullets or numbers, did each of those 3 measures get employed in the implementation of the internal control and so forth? Who did it? Have we documented? If it has not yet been employed, does the control exist? Why was it not employed? Those types of things. Who is the owner of the risk? And what mitigation actions have we taken? Could we take? Should we take, if necessary, to get rid of the initial problem and at the root or core of that problem, root it out so that it doesn't occur in the future? Next slide. As we assign ownership of risks and determine who's responsible, we've got to be clear about who we identify as risk owner to ensure that our accountability measures are properly assigned and to promote proactive management. I know, for example, you call somebody that you were referred to in an organization after a string of pass-offs to 5 different people in the company, and this final person was supposed to be responsible. And the answer they give is something like, well, that's not in my job description, or and you wonder, well, is that accountability, or is there some other way, that answer could have been provided, even if that's the answer, so that the end user, myself, the customer, doesn't hear it in that way, such as, I'm not quite certain that I have the answer you're in need of getting to resolve this issue. I will, however, make every effort to determine who I can contact, what documentation I can find, or take other measures and call you back or email you back with that information when I have it, or communicate with you that I have been successful and what my status is so that you're updated on that progress. And I'm so sorry you're going through that, that kind of thing. And that's the difference between good customer service and a lack thereof. So who owns it? Who's actually accountable for it? Oftentimes it's a head of a department. Whether or not that department head has delegated that assignment or task to someone who reports to them is irrelevant. The head of the department takes the hit as the blamed party. Is it the project manager? Is it the specific functional lead? The benefit of being very clear about who's accountable in those situations of identifying the risk owner is that it does ensure that the people who are supposed to be responsible for things are actually accountable for those things, because they know a priori this is something that I'm going to be held accountable for. And so I'm going to, be sure that I own that process. It also promotes proactive risk management on the part of all of the members of the organization and integrates our risk management process into the daily operations, and people begin to own the outcome of success in that company in a way that you may not otherwise witness without clear assignment of ownership. Next slide. All right, so I'm going to pass it over to my colleague Eric, who will go through our case studies here. Thanks.